Ether-Bitcoin ratio uptick fails to inspire bullish positioning in ETH options. Options skew remains in favor of Ether puts across different timeframes despite the past week's increase in the ETH/BTC ratio. Ether puts expiring in both the short and long terms continue to trade at a premium relative to calls, indicating persistent speculation of a price decline. Bitcoin options are maintaining a long-term bullish bias. The Ether-Bitcoin ETH/BTC ratio rose more than 2% last week, contrasting with its record of taking losses during bouts of risk aversion. Still, options data tracked by Ember Data show a stronger bearish outlook for Ether, with traders hedging against potential price weakness over the 1 week, 1, 2, 3 and 6-month timeframes. Meanwhile, traders remain bullish on Bitcoin over the long run. The short-term and long-term Ether call puts Qs, which measure the implied volatility premium for calls relative to puts, hovered well below zero at press time. That's a sign of relatively higher prices for puts, the options used to protect against price drops. Puts are derivative contracts that give the purchaser the right, but not the obligation, to sell the underlying asset at a predetermined price on or before a specific date. A put buyer is implicitly bearish on the market, while a call buyer is bullish. In Bitcoin's case, the 1 week, 1 and 2 months Qs show a bias for puts, while the rest show preference for calls. The persistent bias for long-term BTC calls perhaps stems from the belief that the top cryptocurrency would be the first beneficiary of an eventual positive. Follow the URL for the full article. For more on this story, visit the news article link.